It looked like it was grayed out, but it's actually going now. All right, goodness gracious, guys. Sorry. Okay, what are we looking like? Are you seeing anything, Talisha?
It does say the webinar is streaming live on Facebook right now.
Oh, okay, it does. Okay, very good.
So I think you're good.
There we are.
Okay, we're there. All right, guys. Oh, yes, there it is. I see it at the top now. Oh, okay, maybe I shouldn't look that way at that screen, but right there. Okay. All right. Well, hey, guys, welcome. It is Wednesday. Welcome to our Black Blockchain Consultants chat. And we have a special guest with us as we talk tokenization, which we have been talking about with some fervency this past week with our upcoming virtual conference coming up on December 4th. We are super excited about that. We have tonight, though, Pat O'Meara and his plus one, Frank Walzak. They're from, I want to make sure I pronounce this right, Inveniam.
Yep, Inveniam
Right.
Capital.
From Inveniam Capital Partners. So let's see, how do we want to start this off today? I know I really wanted to look at an article, but I guess I better just let Pat, since he's pretty much got some tremendous projects going on. It's got a big deal project that we've all seen in the news because we follow a lot of information about tokenization of assets with the guru with us here, Eric, our titan of blockchain technology and tokenization. But anyway, what's new? What's new, Pat, with the WeWork project? And just tell us a little bit how that's going and what's what, because we are familiar with what tokenization is here, so we can kind of jump into some real questions and concerns as it relates. I wanted to pull up an article too, as a matter of fact. We do that too here.
Sure. Well, yeah, and we can jump into that. So I'll talk for a minute about that deal, right? So that deal has not closed. It is still working, and it will continue to work through the system as as everything shakes out. As you know, they're talking about WeWork laying off 4,000 people this week. So that's a bad day at the office. And until the tenant, all that stuff with the tenant settles down, that deal is not closing, right? And so everything that we did to tokenize the asset, and I can show you some of that online.
I would like to see that because you showed it to me live here in Detroit. I wanted to share that with our family here.
Yeah, so I can show you how we do that. I'll take you onto EtherScan. I'll play around with some of the stuff, what we did. But so the technology worked great, but the underlying transaction itself was challenged. And with the blockchain, those are the rails that things have to sit on. But if the deal sitting on top of it is not sound, the blockchain doesn't have magic juju that just fixes everything, right?
Exactly.
You got to have a found transaction. So we've done 14 transactions to date for just over $100 million that we've executed, but the WeWork, being the most visible one, has not closed. But we are going to be doing a number of transactions in Q1 of next year, where we're doing a tokenization, which we talk about as digital proof of ownership. And what we're doing is we're taking that to the next step where we take the digital proof of ownership. So all of the data, not just about the actual deal, but all of the data from the underlying asset. So all the IoT data, all that environmental data, all the energy utilization, the relationship of the asset to the municipality. So the tax data, payment data, so legal, financial, operational, experiential data. We use that smart contract, which is a digital proof of ownership, and we connect all the data coming from the asset, and we notarize it on the blockchain where that smart contract is the thing that notarizes it. Then we index it so it's searchable. We make sure the data is all fielded so that it can be utilized by data scientists. We validate it, right? Because when something's notarized, it's not necessarily true, right? So when you go in and you sign something at the bank, they're just saying, was it you who signed, not was what you signed accurate. Correct. So the first thing we do is we notarize it that, yep, on this date at this time, this came from here. Then we use artificial intelligence, very simple, to say, does this performance of this asset compare to other like buildings? And then we can do things like we can price that asset. So we can enter into what dynamic pricing, where we can do monthly, weekly, and then eventually, hopefully, daily pricing of a commercial office building. And once you do that, where all the data is on the blockchain, and you can do that in such a way that your data isn't being leaked to the market, right? And so you can do that where the building owner, their data isn't going to a database, which is crunched. Their data is connected to a smart contract. They control it. They relate it to another data set to inform it. And this is an extension of a zero knowledge proof, right? Which we talk about on blockchain. And so what happens is you own your own data. Does that make sense? The building owner owns their own data. We can prove the value of that building, and then we can put a price on it. But all of the data for that building is ready for resale every day of the week. So every day of the week, that building, its data is ready for sale. You don't need to hire a broker to come in and put it together. So if all the data is ready for sale every day and you're getting updated pricing, even though it's a private asset, boy, it feels and trades like a public asset, right? It ought to. And that's the promise of blockchain. And, you know, liquidity doesn't come because you can clear and settle something quickly. Liquidity comes because you have bids. And the way you get bids is you got data that people can trust. And this is where the blockchain layers that trust onto the data so that you can socialize the data and solicit bids. And so that's what we're in the process of doing, is getting to the point where we can facilitate monthly, weekly, and daily pricing for commercial office buildings, which has a definite ROI for an institutional owner. So there's a reason to use blockchain other than it's cool. Does that make sense?
Absolutely. And I know, I like how you've said that you guys are trying to be the Zillow of commercial real estate.
Actually, that was somebody in the crowd where you heard me. I didn't say that, right?
Oh, okay. I thought you said you guys.
Our software makes the Zillow of commercial real estate possible. Right?
Okay.
Not us.
Okay.
And we want to be the underlying technology that facilitates that type of a function. Not just in commercial real estate, but in all private markets, private equity, private credit, anything that you have a lot of data that you want to connect that data to the ownership of the asset, right? Because right now, the fact that you own something, all of the data is somewhere else. With the distributed ledger, you can connect all of the data coming out of that asset that you own. And so the digital ownership, digital proof of ownership, the token, right? Or the digital financial instrument, we call them DFIs. That digital financial instrument, or your proof of ownership digitally, is connected to 100% of all the data and is the organizing principle for all the data. So the data from your asset, because in the future, the asset is going to be valued not based on how it performs, but first and foremost, is there good data on this asset or bad data? And if there's bad data, you can have the greatest building in the world, but people don't know. You know what I mean? So if you have good data, then check you're in the club. And then people look at your performance, right? But what's going to prove that? The blockchain is going to be the form of trust of the data. It's sort of like it's the supply chain for data. Does that make sense? Absolutely.
And I love you guys' angle on that, because I think we hear a lot of time, and you kind of have already spoken to the idea that, you know, blockchain is that vehicle that makes all this happen. It's not that it makes a bad deal better. You know, it's an infrastructural, it's a data structure, you know, and that's the approach you guys are taking on that. That is tremendous.
Yes, ma'am.
Did you guys want to add anything at all?
I think the one thing that I do, like, you know, in the conversation of blockchain, we always have this, like, so what's the use of it? You know, again, not to that it's just cool, but a lot of times people want to relate back to the database, and the database, one of the deficiencies is that you have data somewhere and the log file somewhere else and they never merge.
Indeed.
So here you're actually leveraging log file data with the data itself to make it robust, and validation happens immediately when you combine those two.
The blockchain makes the trust of the data commutable, meaning you can transfer it to a third party, right? Because otherwise you have to do an audit and look at the source of the data and where did it originate, et cetera.
And it's too much, and it's always disconnected. That disjoint is so popular, and like I said, you can't have it that it doesn't work that way, and then you have it here where it is a part. It's actually a part of the data. So instead of, again, that's the leveraging of the metadata that we have to make it something of value. And that is truly, I think that the best part of what you're doing at this point is that it's a commodity because it's valuable and it can be trusted and tracked.
Hey, when you're done with Cigna, come join me. Talisha, that is right on the money.
I'm available anytime.
Because the concept, absolutely. We talk about moving beyond databases to data ecosystems where you own your own data, you manage the data from your underlying asset. In order to use other data sets and other tools, you don't need to release your data to a third party where there's potential for total leakage, right? Here, you control it, you utilize it, and you can do all sorts of different things, right? We could use a tinfoil, right, which we say is a little too hard, or a ZK snark, which is zero knowledge, succinct, non-interactive argument of knowledge, which is a little too soft. So we created our own thing called ZK raise, which is a zero knowledge, random, anonymized interaction with a specific data set, right? So that's which is a way which you could take your data, relate it to somebody who has a tool to either validate your data, price your asset, do a risk management function, whatever it is, but you relate the data, then it comes back to you, and then your data did not leak anywhere out into the world. And this
Correct.
is, amen. Talisha, I'm with you. I love what you just said. Yes,
I'm there.
Well,
I'm seeing the vision.
Yes. And, I did want you to talk about that, because it was like, I love how you talked about it in the meeting, the Goldilocks, like you just kind of talked about there. So your protocol, you just called it the
ZK raise.
Yeah. That's what you just described, how it's different and how it's the plus one or the upgrade to just the zero knowledge protocol. Well, what, Pat, what I'd love for you to do in light of everything you've just said, can you show us now, on like you showed me on the, on the blockchain and everything, because we've talked about this a lot, and I think there'd be such a value to our group here. Time goes by so fast, and we can really get going on some stuff. And that it's just so good to actually see it. That's what I was so impressed by. I was like, oh my God, I've got to have Pat come and present to our group.
Yeah, absolutely. So this, it's just a really, what we do is we take a number of different tools and we built an app, and the app is a mechanism for data management. So kind of workflows, right? Just basic workflows for capital markets, and connecting to the creation of a financial instrument, then the performance of an asset, whether it's financial and legal performance, and then underlying property performance and building information management systems. So we take all of those and we just take the outputs of that, and then we set that, and our app is a form to gather that data, again, notarize, index, field the data, validate it, use it against other data sets, and then use that to do things like risk assessment, price, tenant credit assessments, whatever those things, whatever it is we want to do with the data now that it's been organized. And what we do is, that is like, that app sits on rails, right? And if we use a train analogy, right, we built an engine, right? But it's got to sit on rails. And the rails that it sits on, in fact, is the blockchain. Does that make sense?
Indeed.
And the rails that we do that is, we interact with the blockchain as a form of notarization. So we're interacting with the asset and the data and the people who interact with the asset, the owner, the investor, their professionals, whether it's an accountant or a lawyer or whoever it is, the property management team, their tech people. We interact with that, we gather that data, and then when they want to notarize something, we notarize it onto the blockchain, right? And then we index, and then once it's notarized, we index it, we create a taxonomy, right? That it's fully searchable, and we can do that taxonomy in a plain English format, right? Or we can do it using what's called Enigma. I don't know if you guys know Enigma. It's a form where it's a closed circle and people have protocols so that within that closed circle, only they can understand that. And so people who have high data restrictions, so HIPAA requirements, or if you're a bank or a trust company, corporate trust, you can't have natural language exposed. So we just use Enigma in the taxonomy, right? But their counterparties who do search for it can, right? And use a building owner can decide what you want to do, or if you're having a third party do that for you, they may be forced to. But that data, we just stamp it into the payload of those blocks, right? With pointers which sit behind firewalls in existing data retention systems that is searchable then, not in the system, but on the blockchain. Does that make sense? And so that's what we do, and that interaction with it. And so I'm going to share my screen.
Yes.
So quick question, is this event series driven? So you have these benchmark points where you have the notarization happening by something kicking off, and then you go through that process where you validate the information, pull it. You're doing, again, some type of leveraging of the data and a comparison before you actually do the validation portion. Is that kind of something in the protocol?
That's exactly right. I mean, the event series, what we're doing is we're creating event series, full stop, right?
Gotcha.
That's all it is. And it is we say that a smart contract, the bigger and higher functioning a smart contract it is, the more vulnerable it is, right?
Mm-hmm.
And we're still in the very early days, right? There's no debugging tool for Solidity. And in the reality, what we do is we wrote a paper, and we filed our patents in August of 17. And we in those documents came up with a concept called a regulated contract, where we can take a series of smart contracts and then we lock them as they interrelate. And then you unlock the smart contract where you can modularly switch out individual smart contracts that relate to one another inside a regulated contract. But when you try and build a smart contract with too high of a functioning, you create risk, right? You create all sorts of risk. And so the payment functionality that's being discussed and the collateral management functionality and all of those types of different functions that are in the smart contract makes it really tough when you think about building a financial instrument that needs to last 30 years. You know what I mean? Those protocols are going to change in 1 to 2 to 3 years. And if you have to touch that core smart contract, which is the thing that's been writing all of the documentation into the payload of the blocks, what you're doing is you're disrupting that trust stream that's in the event series, right? And so what we do is we say the core function of the smart contract that manages the data is a read function, a write function, a transfer function, a force transfer function, and a delegate where you might have a trustee, right? Who can do that transfer without, right? And we are not in, we think that anonymity is a design feature of blockchains. It is not a constituent element, right? It's not constitutive of what it means to be in blockchain. Correct. And for corporations that have shareholders, if you own shares of IBM and your house burns down, and that stock certificate that says you own IBM shares, you didn't lose your ownership in IBM. You know what I mean? You file an affidavit of loss certificate, they issue new ones, the same thing. If you lose your private key, you didn't suddenly lose your ownership in that building. You know what I mean? What you did is you lost access to a wallet that controlled tokens, right? And so we have this whole process where you have to go through affidavit of lost key, and then we have to go through a holder in due course process, et cetera, where there's another wallet that's identified and tied to your identity, right? So that you don't do that. But one of the things that we wanted to do is, if we're going to get real lawyers and real accountants, right? If our average user makes $850 to $1,200 an hour as a lawyer on Wall Street, and they can't operate their own Keurig machine, we cannot make it too hard for them to interface with the blockchain, right?
Very true.
And so what we've done is we've made these interfaces very easy, so that literally, we take and I'm just going to use, this happens to be on my next stats, right? This is literally going to be sent to someone. So this is a Nano Ledger, a Ledger Nano S, right? And what we do is we say, hey, listen, just like when you do a bank transfer on your laptop, you need a key fob, or you're in the securities industry, you need a key fob. When you use our software, this has to be plugged into your laptop. If it's not, you don't get to use our software. Full stop, period. Does that make sense?
Yes.
No, by the way, if you lose your key fob, write us, we're going to give you a new one, right? And they don't need to know about a MetaMask wallet or whatever, right? All they care about is they have an interface with a protocol that layers trust on all the data that's being created at that time. And the fact that this is the interface, they don't care. Does that make sense?
Yeah.
And so
Yes.
I'm going to take you to Etherscan, right? And
Yes.
you guys can all see my
We see your screen.
yep,
Yeah,
perfect.
we have your screen.
And so
And let me just kind of stop for a second, just to say to anybody who might be watching, on Facebook or wherever, who might not be a part of our illustrious group where we know about these things. We're looking at the Etherscan, which is what's called a block explorer, which allows you to look up transactions on a blockchain. And this happens to be on the Ethereum blockchain. This is their Explorer. Again, things you will learn about in our Blockchain 101 course. And here you are. This is why I really wanted to bring Pat along here to bring to light everything we teach in the Center for Blockchain Studies. So back to you, Pat. Thank you.
that's awesome. Good. Thank you. And stop me at any time if what I'm saying doesn't make sense or it's unclear or you just think I'm tiresome, right? So whatever.
And you guys, anybody watching the questions on Facebook? Because I don't see it. Can somebody be watching? Anybody see any questions or anything coming up in Facebook? Sorry, Pat.
No problem. So you keep going. We have
Yeah.
12 questions in our chat room I'm seeing.
Yeah, I can see the chat one, but I was wondering about Facebook. Okay, cool. Thank you. I see Sharice saying something. Okay, thanks.
We've done 14 transactions for about 102 million that have been tokenized using our own software, right? So we created our software in May of 17. We were functioning, but we're constantly improving. But even through early this year, for us to tokenize and utilize our own software, including our internal staff, literally we were having to go into GitHub and grab software to facilitate, which, as you know, is not a way to entice any professional to use any software, right? I mean, so we did 14 transactions where we had to, where it was very clunky. And then we're now in version 2.0 that we're going into beta. And we've got a series of large corporations, and I'll show you how it works and what it looks like, and that we can play with it for a minute. But these first 14, that where we did transactions using our version 1.0 of our software, we literally could. So all these rail car deals we did. We believe this is the first debt deal ever done on the blockchain, Savona Parkway, and then phase 1. And we did that in February of 18. So literally 10 days before Harbor put out their white paper, we had actually done a trade with a third party funding a debt deal on the Ethereum blockchain that achieved the outcomes. Every outcome we had one of our team members go through, every outcome that the Harbor said they wanted to achieve, we had already completed in an actual market trade.
Fantastic.
Right?
Yes, we want to see.
Yeah, and so we completed that. That was phase 1. All in, that was a $52 million. So that was over half of all the capital transacting that we did in 3 transactions. But I'm going to take you into so let's take the WeWork building, right, which everybody was very high profile, and I wish we had picked the Savona deal to be our high profile deal, right? You know what I mean? That we broadcast that all over the world because
Who knows, man?
Yeah, right.
Turn out.
Yeah.
Yeah, that's right.
Okay.
Yeah. Anyway, this is the transaction, right? 600 tokens, 50,000 a piece, if you guys recall, right? We ended up getting 187 million of indications of interest on that $65 million trade. We had 20,000 page views. We had 16,000 entities interact with us. 4,000 identified themselves as capable of buying. 1,000 we actually qualified, of which 200 we went after and interfaced with, 60 of whom fully got legal teams involved looking for our documents. We had and 14 submitted indications of interest, right, for 187 million, which is pretty awesome. And so 600, we haven't distributed this. This is not closed, but we go to the contract, right? Here's the smart contract. There's 43 transactions, and each one of these You see these are 155 days old, right? And I'm going to open this, right? And this was about a week and a half before the deal was going to close, right? We saved all of the information that you would expect to see in a deal room. And what we were doing is we were providing a mechanism to validate or notarize this data. And so I'm showing this UTF-8 data, right? And so this is the deal name, Inveniam Commercial Real Estate 1 LP Interests. Here's the document. It's a WeWork binder, right? Here's the URI, which is like a URL, except instead of a location, it's an indicator, right? And we just use data standards specified in ISO 8160. And we do this because we are what's called a FIGI node, a Financial Instrument Global Indicator, which is Bloomberg's open source network, right? And then here's our checksum, the checksum algorithm. So we ran SHA 256 against this document. And here's the checksum that came out. Now, watch, I'm going to take you here. I'm just going to copy this, and I'm going in the back door, right? What we're doing is we're auditing through the blockchain this information, right? So here we go. I'm going to go into it. All right. And it's a large document, right? And I have signing credentials, right? Because I own the master token. This is the document that relates to the $17 million renovation of a building that they bought for $22 million. It was a failed condo. They bought it, then they did it. But literally you can see all of the inspection certificates of this renovation, right? I mean, this is the metadata all the way down. And if somebody changes these smudge marks, right, for this concrete repair, right, or whatever it might be, the column enhancements, the structural steel, right? I mean, we're looking at, all of this data. Literally, this checksum will change, right? So if any part of that data is wrong, now you can go in the front door through our deal room and look at all of this data. And when you do so and you download it, it puts a watermark on it, right? And when you put a watermark on it, that's because if Frank decides he's going to download the information and then he's going to share it all over the internet, we know Frank was the leaky vessel. You know what I mean? He's the one that did this. What we have, sorry about that, Frank. In the Inveniam data retention system, right, which is what we're using, this data retention system, if you have MetaMask and your MetaMask is on and open and you're signed in and you own that token, you have automatic access to all the documents with no watermarks. Why? Because they're yours. You know what I mean? It's just down, you can download it, etc. Right? But anybody else has no access. The only other people who would get access are the issuers, right? So the person who's issuing the security, whatever it might be, or a regulator. But the other thing that we've done is there's a mechanism where you can have this pointer going into our system and it's pointing to an AWS S3 bucket. It can be pointing to a corporate trust department. It can be wherever you want your data stored. You know what I mean? And all this is a pointer where it is, and it's acknowledging that you're the owner because you have a token in a MetaMask wallet.
Gotcha.
Does that make sense?
Yes.
And as you know, you can connect your Trezor, you can connect your Ledger, any of those things you can connect to your MetaMask wallet, right? And so what we do is we have a mechanism where we can see all of this data. And then I'm gonna take you into our demo software, right? This is just our demo software, right? Where this is the Savona deal, right? And this is, again, I'm in a demo system, right? We think the whole world is organized into 4 batches. And this is, again, like Asana for capital markets, right? It's just workflow. And so origination, structuring, distribution, and performance. And performance is not just performance of the instrument, payments, audits, financial statements, insurance portfolio, compliance certificates, forbearance agreements, any of that stuff. It's also asset performance where we can get data feeds directly connecting in. Does that make sense? And we can go in and we can look at those. And it's really easy. We made it super easy. Sorry, for somebody to use this and to go in and change things. And I want to mark this up and just play with it. And within the next couple of weeks, we're going to have people able to I'm just playing in the wireframes right now where you can see who's the status, who put it in there, We've got a data room. You can see is what's in the data room and our data retention system, the deal room that people are looking at it, is that synced? Or is what's in the deal room, has it been changed? So it's not syncing to what the checksum is. Does that make sense? So every time you pull up a document, we have an automatic sensor. Is it synced or not synced? And if you want to sync a document, you can view the taxonomy that's going to be in there. What's the FIGI ID, the location, the timestamp, how do we do this, right? And so, we just make it super easy for you to interact with it. But then not only that, and this is just telling me that I'm not on the main Ethereum network, I'm just playing. We can actually begin to model the performance of the instrument. So this is, I'm gonna choose a pricing model. I'm gonna go in and I'm gonna be able to see, okay, what are the data feeds? What data feeds are active? What data feeds are not active? What are not applicable? And the data feeds that are there, how important is that data feed? Meaning, how much does that impact the actual price of the asset, right? And as you know, most of price is going to be what's the net income that's generated, what's the cost of money in that area for the submarket, but we can submit that. But then we can also look at other data, and we use all data. So we have 550,000 data sets for every MSA in America. So any data set that's used by the Federal Reserve or for the CPI in order to produce data sets. So whether you're talking about vacancies, unemployment, industrial output, all that data, by address, we can link that directly to the token. You know what I mean? Where it's automatically being updated. So you can say, how is this doing against that? And then we can say, what's free, what's not free? How do I want to pay this? Right? I'm gonna buy some data that I'm gonna attach to my token. And then I create a digital instrument. And the creating of a digital instrument, literally, we make it super easy. You name it, you put the supply, how many decimals, which is how much you're gonna fractionalize it, you submit it, then you literally deploy it. And again, I'm not doing this for real. When you actually do this, it takes between 2 minutes and 8 minutes, right? And it costs about $13 to create the master token, but then every time you save a document, it costs, half a penny, right? And it's in that range. And so all of this information you can see when's it last traded, all of this, but all of this is just information that relates to getting a price on an asset, and all the data is there. So if you ever want to sell something, it's easy to sell, and all the data that you're commuting has the supply chain for that data all the way down to the environmental sensor on floor number 8 that says this was this is the IoT source of that data. You know what I mean? We know what the sensor was. We know where it came in. We know that it was notarized. We know that the data was validated. And then we compared it with other sensors producing that kind of data. And we do what's called a high-low 2 sigma calculation, right? Is it within a range? We don't say it's accurate. We say it's in a range for other buildings like that. Does that make sense? So that it's
This
an
is a
easy,
very
automated
interesting
thing.
tool in that sense that you're capturing that level of
That
data,
much
because
data.
this is where we'll bring in our secondary topic of opportunity zone.
Mhm.
Because again, it goes by not only the demographic, but how you're moving that out. So then you get that metric data by perusing the actual boundaries of where that piece of land is, what it was like. And then you aggregate that obviously at some point. So you can aggregate what it was, 15, 20, 10, whatever. And then also what's coming in.
Batch it, right?
That's phenomenal.
I know, right? Isn't that amazing?
Mhm.
And then we can go in and we can do this. And so we have a couple of our beta partners. So we have 2 of the 4 biggest. So we have some of the largest real estate property managers in the world, including the largest one, where we're going into beta on 10 commercial office buildings on 2 coasts and 5 cities, where we're providing a digital proof of ownership. So for their limited partners who own this, $100 million building in downtown New York, LA, Boston, we're going to take all of that digital proof of ownership and have that digital proof of ownership, that smart contract, start becoming the organizing principle of that data deluge coming out of that building, and organizing that data and creating that supply chain so that as time goes on, your data doesn't become stale it becomes more and more and more seasoned and more trustworthy. Does that make sense?
Yes.
Absolutely. Absolutely.
Patrick, I have a question.
Yes, sir.
Especially for Inveniam, and maybe you guys already have your sights set on this. Do you have any intentions to, at some point, start targeting the residential market? And let me just tell you where I'm going with this, because like where I live, probably the street over, my neighbor, they have to get flood insurance.
Yeah.
Okay? So they have to get flood insurance, and I don't have to get flood insurance. They're only one street over. So I'm kind of going, wait a minute, if it was a flood, wouldn't we both flood or whatever? So, but that's just how it is. But then, then I look at it like, well, wait a minute, if there was that data collected on the IoT device that was there, that would be very valuable to the homeowner, even probably so as well to the insurance provider themselves. But it was just been making me think about that. And do you guys have any targets on the residential market eventually?
Yeah, so we do. We're excuse me. We're focusing on that. And when we go into all of these, one of the things that we did is, and I'll use the WeWork example, right? We spent an enormous amount of time. Please excuse me. We spent an enormous amount of time trying to facilitate crypto, where we could take crypto into our deal and deliver them an electronic instrument back into their wallet, right? And we could take 10 different currencies, and building that Rails cost a lot of money, and getting the lawyers and thinking that through and getting everybody comfortable with that was deeply painful, right? And we had nobody actually come in and say they wanted to put money in. I think we had $3 million of interest. It was horrible, right? And we spent all of this money. And one of the things that taught us is that's all great, but there's no business there. You know what I mean? And we got to actually have a mechanism where we can deliver an ROI for people to begin to adopt the benefits of using this technology. And if there's no ROI, man, it's like selling Y2K benefits. You know what I mean? You can scare people a little bit, but man, it's tough to get a big sale, right? And so you got to say, hey, listen, are people going to move off their existing data retention systems onto a blockchain system? Sure, but maybe in 7 to 10 years, not today, right? Cigna's not going to do it, right? MetLife's not going to do it. Pick any real company, they're not going to do it. They're not going to jump in and start putting things on the blockchain as their primary source of data retention. But if we say to them, hey, this is a form of secondary data retention, so that when you do execute transfer, it is a transfer that commutes 100% of the data from your primary system to somebody else's primary system, and that commutation is instantaneous, right? All of a sudden they go, man, that makes total sense to me, right? That makes sense. And not only that, I can say, hey, by the way, I can deliver to you an ROI because when I give you monthly, weekly, daily pricing on your asset, we change your accounting treatment from what's called FASB 157 level 3 to level 2, which changes their capital at risk calculation, that changes their tier 1 capital calculation. So anybody who's a participant in Basel III, this has enormous financial benefit to them. Well, then all of a sudden I say, hey, listen, I can help you deliver ROI by maintaining your data better and giving you pricing on an office building you own. I didn't even use the word blockchain, but none of it was made possible without blockchain. You know what I mean?
Absolutely. That's how it's going to be.
Yeah. So now let me go to residential. How do we do that in residential, right? So we, as you know, there are 3 or 4 very large, Cerberus is one, Blackstone is another, residential real estate property leasers, right? They lease out single family homes, right? And these single family home REITs. There is a single servicer who is the primary servicer of those when a tenant blows up a house. Do you know what I mean? For whatever reason, right? They rent it out on Airbnb and it turns out to be a party house or whatever it is, right? And then the REIT, single family REIT, doesn't want to own that asset. You know what I mean? They want stable tenants. They want a guy's got a job, he's got 3 kids, and he's married. is your perfect tenant. Do you know what I mean? That's his job, right? His job is to make sure they get to soccer on Sunday, and that's it, right? After they go to church. That's his whole job, right? And so that we're dealing with that servicer, but the key is, can we collect data from those houses in a meaningful amount that can inform a data set that's actually valuable? And the problem is most of those houses produce zero data. You know what I mean?
Okay.
Like, you know, you got a house that was built in 1992. Man, there's not a thing smart in that, right? You know what I mean? But you go to commercial real estate, you have smart buildings that exist today. You know what I mean? And they're producing enormous amount of data. So as new buildings are being built and as new homes are being built and there is data, we do think that there's a market for that, but we got to have a partner and he's got to have critical mass of homes, because having 3 homes data isn't enough. I need 10,000 homes data for me to be able to compare it so I can validate, right? It just
should come here because Northern Virginia is experiencing that explosion right now, commercial as well as real estate. They're moving so very quickly. We have new builds all over the place with smart technology coming into play because they're trying to leverage all of this. And this would be that perfect time to have that data, because you're going to get an influx of it all at the exact same time because they're building in big chunks and units. And that, again, that will also go to the zoning of schools and those kind of things, because we have a strong issue with zoning here because everything has to be reallocated every 2 to 3 years because of the surplus of individuals moving in and commercial space being turned into residential and residential being turned into commercial. So
we have tried, we made a run at it, right? And our first partner we went to, because we thought, man, this would be the smart way to do it, couldn't give us enough data.
Yeah,
Does that make sense?
you have to have the data right.
We got to find the right partner. We got to find who's going to do it, because we are not in the installation business. We're in the software business. We give it away to people who actually have businesses that are collecting data. We work with them on the integration, and then we can start producing outcomes from data sets.
Right.
Does that make sense? So we haven't found, Eric, the right partner yet on residential.
Okay. Got it.
So that was a really
hard positioning
for your data ecosystem.
No. That was good. I mean, you know, of course, myself, I'm going, wow, man, I can see the tons of applications on, like I said, how that could benefit a homeowner, how that could also benefit, you know, those insurance providers themselves.
We agree completely. We just have to find it. And one of the reasons we're starting at the large institutional space is because we can deliver a benefit to them. You know what I mean? Which will drive mass adoption, right? Because you got to find something that's going to drive mass adoption, and then, you know, in the early adopters. And so and we think we have found that in the commercial real estate, and they have good data sets, right? They have really good data sets.
Yeah.
Got it.
Yeah, that was strong positioning on Inveniam's part. That was brilliant. Yep.
It was brilliant because the first 72 things we tried failed.
Well, you tried again. So very good. We appreciate it.
So Patrick, that being the case, is there certain regions that are much more, I mean, where you guys have seen that are much more receptive than others, or is it pretty much whomever?
So we have not seen regions where people are more receptive. We've seen types of owners and users, and so we have we're seeing an enormous amount of interest, right? We're receiving inbound phone calls that we can't even possibly respond to all of them, with people saying, we want to use your software, from big institutions, Fortune 1000s. And so we're going into phase 1, where we're using 5 institutions, where we're targeting them, and they're, you know, big companies. But we're in dialogue with 7 Fortune 1000s companies, and we're pushing several of them out to Q3 because I just don't even have a big enough time, you know, team to do an implementation for them, right? And so we say, and so, you know, that's a good problem, right? But we need to let's get 1, 2, 3, get that done and go. But, you know, this implementation, once that begins to happen, we're building it in such a way that the APIs and the connections, we want to be a total open architecture where Eric can build a tool for a homeowner to use my system to gather the data. Do you know what I mean? And here it is.
Sure.
We want there to be an app store kind of a thing, right? An app store for people to build tools to analyze data. And we want anybody to be able to go in and download our software and just gather the data for whatever kind of asset they want. And we're not even going to be able to think of all of them, right? But where you're connecting ownership to data about things that you care about. And I'm telling you, people are going to use this for things we've never even thought about, right? Where little, what's the boxcar derby thing where you carve the little thing and it goes down and you're going to remember, okay, how fast did it go down the chute, whatever. And they're going to be comparing times for their little, Boy Scout derby, cars or whatever it might be, or it might be watches, or it might be paintings, or it might be, but these are things where you have a lot of data that you care about, that you're going to compare. We've had a number of fast food restaurants where they have an enormous amount of data on everything, and they're saying to us, I want to start valuing my franchisees' stores every week.
That's what I thought of immediately.
Mhm.
Franchise
Absolutely.
Yeah, because then their franchise, if it's easy for you to get a franchisee out when he wants to sell, it's easier for you to get them in. You know what I mean? Because even though it's not definitively liquid, the promise of liquidity and the mechanism of liquidity gives them more hope than just, I got to market it. You know what I mean? And so they're super excited about that. You can also then begin to compare who's got mispriced capital, who's paying more for their loans than somebody else who's got similar. So you can find out who the right lenders are. And all of a sudden you create marketplaces for all sorts of different things. And these are all things that I want Eric Spence and Talisha Shine to build your own apps to compare, one Popeyes to another, or one Burger King to another, or one or one watch, to another, or whatever it might be, or, risk modules or whatever, but where data sets, you're comparing them. And the point is, the owner of the franchise owns their own data, and then they relate it to whatever you want. And this is the exact opposite. I have a whole spiel where we talk about, 2002, LinkedIn was started, 2004, Facebook was started, 2002, Gmail started giving away free accounts for all of that, 2008, Android. And we were like, oh, isn't this great? All open source, it's all free. We just didn't realize all of our data was everybody else's now.
Everybody.
You know what I mean? We gave away privacy, right?
Yeah.
This is now kind of the process of slowly gathering you through the control of your own smart contract, right? That controls who owns what. And the data for this building doesn't sit in somebody else's database, right? And I got to pay to access it. Rather, I own my own data, and I only relate it to somebody's tool if they're willing to use a ZK raised or a tinfoil or whatever it is to protect that my data isn't going to leak out into the whole market. You know what I mean? But it's got to be done in such a way that there can be an audit so that there's truth as it relates to value and price or whatever it is the outcome is, right? And that is built for cryptography, right? That is built for zero knowledge proofs.
Zero knowledge proof. Yes. Well, all right, guys. Well, let me ask a few questions here that are coming through the chat. We have Daniel who wanted to know, where do you see a data scientist's role providing such insights in the data sets that you're working with?
We've built all of this to be the playground for data scientists, right? Good data, that there's provenance for the data so that you can trust it or distrust it. Then you've got data sets, and now the question is, what are you going to do with it? You know what I mean? We don't know. We're not smart enough to be a data scientist or what we're going to be able to do with all the data. All we want to do is say, we've collected the data. It's as clean or dirty as it says. Do you know what I mean? And it's going to be transparent. And then what are you going to do with this data sets? How are you going to do it? And what we want to do is, we think that the ability to move into getting institutional buyers into smaller and more disparate types of fields and assets is that you're going to deliver to them data in a form that they recognize, they're used to, and that they can trust, right? And so you're going to have data scientists helping you build things so that institutional buyers will want them, and also data scientists saying there's not enough data in this MSA. We need more things here. You know what I mean? We need more things, more assets to be digitized in order to get institutional buyers coming in here, right? So we're going to find in 10 years from now, you're going to have efforts to digitize buildings in Birmingham, Alabama, because for a city their size, they don't have nearly enough digitization and not enough data, and because of that, institutional owners are shunning them. You know what I mean? Institutional allocators are shunning them. So they're going to have hey, we got to digitize. So we built our whole system for data scientists.
And you know, Pat, what we do with Black Blockchain Consultants is we help, you know, build blockchain jobs and, you know, get on projects and such. So are you guys hiring? You see, we got the people here.
Yeah, we're in the middle of a round right now that, knock on wood, hopefully we're going to be done in about a week, a month. Frank wants it to be a week, but a month. We're going to be down. Yeah. And then we're hiring, right? But let me tell you, one of the things that we're going to be doing is in each and every one of these implementations, there's going to be a project team that's not going to be our own. You know what I mean? Because I do not want to be in the consulting business. I don't want to have a body shop. What I want to do is partner with 5, 6, 7, 8, 10 consulting companies who know how to integrate, you know, these what are called BI, building information management systems, right? Mm-hmm. And have that information and know what they're doing, or a property management system. And that property management system is typically, you know, financial and legal, and building information management system is operational and experiential, right? No, where they say, I can do those, and where we're taking all of those data feeds, just plugging them into the APIs, making sure all the data is right, and then it's going into our system the correct way. And we're going to need lots of people helping us do implementations every single building we get, because when you get a new building, it's gonna cost, you know, we're gonna find out, right? We have some estimates, but you know, $30,000 to a couple $100,000 to digitize everything. Do you know what I mean? Mm-hmm. And have all that information being collected. And once that's done, though, their cost is fairly low using our software going forward. But boy, we're going to need a lot of project management consultants. So,
so Pat,
we're here for you.
Welcome. We are also Blockchain Consortium International. You're looking at Eric, who is the president, and Talisha, who is are you vice president, Talisha? Yes, of the group. So that's what we're here for, my friend. So
all right.
We will be in touch, because that is exactly the business that we're in, to support blockchain projects. And this is definitely one that is dear to our heart. Like I said, December 4th, we'll be running our virtual conference on tokenization of assets. We'll be talking about opportunity zones and equity crowdfunding. So, you know, we're your people.
Well, yes, you are my people. I'm going to be on those dates. I'm in London at FinTech Connect. I'm sorry that I'm not going to be here. Otherwise, I would be here participating. But however I can support you guys, you let me know.
Okay. Well, we also will be having our conference in February. We have an annual conference. It will be in Atlanta, actually, in 2020. So, and our focus, guys, what is the focus again? It's always ownership.
This is the blockchain. So this kind of fits right on in, and we'll be actually tokenizing an asset there as well.
Right,
so this
right. That was what we talked about at first. That's right.
A great segue.
Yes, absolutely. So yeah. So we'll be in touch, and guys, it's exactly 7 p.m. If there are any more questions out, are you guys seeing any questions out in Facebook?
This was so great, Pat. This was like excellent.
Tremendous. I'm telling you guys, when I was so pleased. This was one, and you know, shout out to Detroit Blockchain Center. Actually, Nate Talbert is my friend here, and that's where I had the opportunity to meet Pat at their first meetup that they had, the Detroit Blockchainers. So yeah, once I heard this, in light of everything that we've been talking about, we had to have Pat. So
Thank
I'm
you.
so glad, and I'm so glad you're got that Michigan representing here. I know you have your business in New York, but yay, Michigan.
That's right. That's right. Go blue. And I want to tell you, because you never know, right, where you're going to do this. So I'm at my church on Sunday, and I'm with one of my kids, and it's a, afterwards there's coffee and donuts, whatever, right next door, and I'm sitting in my church, and somebody comes over to me and is like, "Hey, don't you do something with blockchain?" I'm like, "Yeah, I do." And they're like, "You should meet this guy. He does something with blockchain too." And I'm thinking, okay, who knows, right? And he's the head of the Detroit Blockchain Center. He knows all sorts of stuff, and he's
Wow.
super smart. And he's like, "Hey, we need to do something. Can we have you come speak?" When that's how I met you. So you never know. You never know where you're going to do it. It's going to be
I'm telling
whether
you,
it's at church or at the Detroit Blockchain.
exactly. That's what's so awesome right now, as we keep talking about. We know we're so early in this space. It's a small ecosystem, so we got to work together. So
Yeah.
let's bring this thing to market. So we'll be in touch, Pat. So
Right.
okay. All right, guys. I don't think I see any questions anywhere, but that's been Black Blockchain Consultants, our blockchain chats. And thank you guys so much for your time this evening. Watch for what's next. All right. Bye-bye. Good night.
Have a nice
Thanks,
night.
everybody. Thank you so much for your time, guys. Night, night.